Hi there, Kelvin Kelley here with Watson Mortgage. You guys probably, guys and gals, probably know me, at least recognize me with my little chrome dome going on here. So anyway, I just wanted to join you this morning. I've got some interesting information I want to talk to you about, and it's really got to do with why your buyer needs a pre-approval. And it's not so much that you know that they would qualify for a mortgage. It's really about doing it right and doing it right the first time. That's what it comes down to. See, you know, since you're in the business and you've written hundreds of contracts, that you need to know what type of financing is going to be involved in order to accurately write the contract. I mean, you know that, I know that, your buyers don't know that. The sooner you know, then the better off you are as far as being able to structure the offer. Because we all know that if it's going to be VA, then we know how to structure the offer. You know, no down payment required. There's still going to be a binder involved. We're going to ask for the seller to pay for the WDO. You know, there's certain things that we know. If it's FHA, you know, we've got to make sure that we populate the purchase price and the contingency paragraph for FHA. If it's conventional, you know, we have to make sure that we check the conventional financing contingency. So there are certain things about the contract that are based on the loan program. And, you know, we know that sometimes loan programs can change during the process because of one thing or another that comes up. But the sooner you know what that loan program is, the better off we are. Now, what you may not think about is that there are certain cases where the buyer may not be eligible for a loan because maybe they don't have any money, maybe they don't have a lot of money, maybe they're not a first-time home buyer and can't get down payment assistance, maybe they've got no relatives that are speaking to them so they can't get a gift from a family member. In cases like that, we can still put the offer together as long as they've got the money to put down for the binder and they've got a credit card that they can pay for the appraisal and maybe the home inspection. We can still put a transaction together. It's just we have to get a little bit more creative. Now, let's say a property is listed for $200,000, and let's say that it's a first-time home buyer, and we're going to use down payment assistance and all this kind of stuff, but it doesn't work out. You know, it just doesn't work out that the buyer has enough money to make the transaction work. They need a few more $1,000s. Well, if we know that up front, then you can structure the offer to ask for the seller to pay that certain amount that the buyer is short in closing costs and prepaids in the form of a seller concession. And if you start the negotiation up front asking for that, knowing that we need it, you're a lot better off, and the chances of success are a lot better. Now, let's say that the property is truly priced right, that it's worth $200,000, that the seller is not going to accept $200,000 with a $4,000 seller concession. Well, there's no reason why you couldn't offer $204,000 and then ask for the $4,000 seller concession. Granted, the property has to appraise, but the way appraisals work is that an appraiser is trying to justify the value. See, the true market value of the property is what the seller agreed to pay and what the seller has agreed to accept and the buyer has agreed to pay. So the appraiser is trying to actually meet those two together so that they can support the value. So it's a lot easier to get an appraiser to come in at 204 on a property listed at 200 if the contract says 204 to start with. If you go in at 200,000 and they accept 200,000, the appraiser sees 200,000, that's going to be the value of the property. There's not going to be any chance they're going to come in at 204. So the sooner we know all this information, the better, and the easiest way to find out what that information is to be able to structure that offer is to make sure your customer is pre-approved. And hey, I'm here to help you out. I'm a tool in your belt, and you can use me or abuse me as long as you accept the fact that I know what I'm doing. So I'm here to help you out, and I will do anything and everything I can to make sure that you close more business this year. So I am Kelvin Kelley with Watson Mortgage, and I'll see you around.